Hey, very good afternoon to you traders. Mark here from Daytrading Room. Times 20 to 6, Sunday afternoon London time. Want to review one trade in particular today for this video. I'm reviewing it because I feel it's important for me to review because it's one of those that comes up every so often, but I feel it's quite a high probability trade. Well, not only I feel that, but I've seen lots of statistics that show that it is a pretty high probability trade setup. So just cast your mind back to last week. The week we're talking about now is 13th, well, Thursday was the 13th, Friday was ending the 14th. We had a big sell-off on Thursday, second highest range of the year for the YM on the cash session, and I want to talk about the day following, so the Friday. Okay, so here we are. Now, the thesis of this trade is when we've had a significant trend day, and in this case a downtrend on Thursday, so a trend day obviously being opening near the high and closing near the low, and you can see there that's a pretty clear trend day for anyone's book. And the point is, you're waiting until that day is finished. I'm not going to talk about the trades during that day. This is the subsequent day after the trend day trade setup. Okay, now the thesis is on this trade is that the market is going to revisit the prior day's extreme. So in the case of a downtrend, as we had on Thursday, it's going to revisit the next day that level. If it was an uptrend, the thesis is going to revisit the high of that uptrend the next day. That's the idea. Okay, and the first thing you need to look at is the overnight session. Okay, so in the overnight session, how far does it go up? You know, if we start to open up here, then you're going to think, okay, perhaps we negate it because we've clawed our way, you know, back up half of the total trend here. So if it does that, I'm not interested. If we start sort of sitting around here in the last couple of hours of trade area, then for me, you know, it's game on for the trade. So that's sort of rough filter to use for it. Okay, so how do I time it? Well, what I look is for any key level of resistance or support. Well, it would have started off as support and turned into resistance from the prior trend day that I can work off. And now here, the one that stands out to me, and the one that I highlighted on before the morning of the bell, or sorry, on the morning, should I say, before the bell, was this level here. Now it was rollover on this day, so we're now on the June contract. We were on the March, we flipped over to the June, so the volume you know, flipped over halfway through the day, but on the Friday we flipped over fully to the June contract. But nevertheless, doesn't matter as long as you're keeping your charts the same and you're working off the same things, you're not getting confused. But anyway, on the June contract, we had some good support here on Thursday on the trend day at around this 1678, give or take, you know, 5 ticks either way on the YM. So we held here, probed through, pushed back up, held again, held again, held again, rolled over. It then became resistance, and you can see we tagged it 3 more times before we finally rolled over, you know, and messed around into the close. So for me, that's a good level, as is just above it here the 16100 level. You can see it was the top there. In fact, let me zoom in a bit more on that. You can see we sort of got stuck in that little bit of range area between the noon, or well, around 1 o'clock New York time, for sort of an hour or so, which is not unusual for a trend day to congest a little bit. So you can see the 16100 then became resistance there as we tagged on it. Not a massive resistance, admittedly, only for an hour or so, but that's the point of the trade. You're looking for some sort of area where there were sellers in the case of a downtrend the day before, so that if we get a revisit the next day, the assumption is those sellers have possibly still got work to do, orders to do at that level. So for me, 16078 up to the 16100 was a level. I'd marked it on my chart as a key sort of zone area to get involved in the next day. So the thesis of the trade, as I said, is for it to push back up, tag a key level or break through a key level and put a wick in, and then I'm expecting a revisit of the low. Now there's a one red flag for this, that was the overnight action. We'd already tagged the prior day's low. We put a wick in and pushed back up, so that diminishes it slightly, but the odds are still reasonably high on a trend day of revisiting that level. So I'm going to try and wrap a trade around that. I'm going to try and get into a trade and use that as a final exit strategy. So what happened here is we marched off the open. We opened up at the low, which again negates it slightly. And in fact, you know, you're starting to layer up the red flags here, which is possibly why you'll see in a second why I traded it the way I did and didn't quite hit it, you know, as aggressively as I would have if we hadn't did these red flags. But we opened up at that level. But the idea being is you're going to rotate up and then we're going to rotate back down and tag the level. In a perfect world, we wouldn't have opened up here. We would have opened up, you know, around the gap level, perhaps rotated up and pushed back lower. So you know, there's a little bit of a red flag there, but nevertheless, if I see the tape stalling at my key level, a reminder my key level was this line here in the 16,100, I'm going to have a shot at it. I'm going to have a go. I'm going to take the trade just because I know it's a reasonable level. I know I've got the odds on my side. We're not pushing right back into the trend. You know, there's plenty of reasons to take it. So we started to push up, chug, chug, chug off the open. I'm not getting involved in the long. That's the one thing I won't do. You know, if I've got a thesis for the plan, I'm not going to start going against that plan and getting involved in the long, despite it being a nice, valid hold flag. You know, push up, however you want to trade it. The VWAP kept things kept things pushed the upside. That's fine. You know, that's perfectly valid. Ticks were strong, and you could have traded up to that key level of resistance without any problem. You know. Good on you if you did that, because it was a reasonably decent move. But for me, if I've got a thesis, I'm going to wait for that premise to play out, even if it turns out to be wrong and it rips straight through. That's fine. You know, maybe I don't take it, maybe I do take it, get a stop, whatever. I can't flip flop back and forth, especially if I'm waiting for one specific trade. Now I will trade both directions, long and short, in a reasonably smaller time frame, if I feel that that's, you know, acceptable and it's part of my thesis and play idea for the day. You know, I'm looking for a push this level, blah blah blah. I want to see who's in charge. But when I've got a larger idea in play, it always pays for me, judging from past experience and past mistakes, to wait for that to come into play, despite, you know, reading the short-term tape and saying, hey, this is strong. It doesn't matter. You know, I want to wait until you know, the trade sets up. So we pushed up here, and it was a really strong flag right at the key level, and you could see that for me then cemented that it was in play. But the short-term tape suggested we were going to blast through. You know, we're holding right at that high. The ticks were very, very high, and we only really got up to about here. So yeah, that's it. Triggered the short. Off I go. In I go. Take the short trade. Now this is where perhaps the mistake came into play, is not looking for a second subsequent test before waiting for the short. And I think if I'd have waited for the second test that failed, I'd be more confident to take more size on the trade. You know, it's reasonably small size for me, this trade, only because of these red flags here. You know, we'd already tagged the low. The tape looks strong here, but it was okay. You know, we pushed up. We had a nice red, you know, streaming red bar here. Tape looked weak. There's level to work off there for your stop point. You know, and I think it's okay in this situation to use that as a stop, because even though it's reasonably tight, and tight stops generally are a little bit can be, you know, can chop you up. In these circumstances, it's valid, because the validity of the trade is negated if we do push above that high. The idea is you're pushing above a key level, and we're going to roll back over. And I was a little bit concerned, obviously, that 16,100 was there. So that's, you know, all these things combined, it really is a small size trade for me. So scaling out as we push down, taking some off the table as we stall at the VWAP, of course, then looking for the final lot to take off here. Didn't happen. We rolled back up, taking a stop out on the last batch at break even. No problem. Let's see what happens. I think the trade's still valid. It was a grubby price action, no real volume, but we'll see. And then we pushed up again, 16,100, key level, struggling, roll back over. I decided to take the trade again with a stop above the high, and then, you know, we can just see what happens with the chart there. We just rolled over, taking some scales off, and I was sitting with it, thinking, is this going to roll over? But when we sort of finally started doing work under the VWAP here, with the final batch of scales, that sort of, for me, said, okay, this looks better. And here as well, this was the trigger for the trade, actually. It wasn't here at all, it was this point here. As we pushed under this zero line on the ticks for the first time since there, that was a trigger for me, and I was happy to take that there a little bit later on in the trade, and then look for that to unwind. I know it's close to the VWAP, and again, you know, this is why I wasn't really going in as full, as large as I should be, really. Maybe if I'd have waited for the second push first time, sorry, rather than taking it on the first time, wait for the second push, maybe that would have been a bit a better trade and been a bit more aggressive. But hey, nevertheless, we rolled over, and then finally we just sat here, and I'm sitting at the just under that Friday's low, looking for the flush through, and it just sat here for minutes and minutes, and finally, I mean, it wasn't really a flush, it was low ticks of the day, managed to take the trade out there. So the premise of the trade worked. It wasn't perfect. There were lots of reasons for it not to work, lots of red flags. But when a trade sets up and it's looking like it's doing what you want it to do, sort of it's ticking a few boxes that it needs to tick before you can take the trade, and then you can quantify the risk, i.e. it starts to fail at your level that you've already marked out, the 16078, the 16100 from the day before, and then it rolls over and you get a little trigger. Maybe it's the tape, maybe it's the ticks, whatever it may be. In this case it was the tape flurry here. In this case we had a gap, good push down the ticks. The tape looked weak again there. If I can quantify my risk and it's reasonably low, and my target's decent high compared to the risk, and everything else is lining up, then I'm going to take it. Yeah, I might not get as aggressive as I would do if perhaps it was something a little bit more meat to it and a bit more volume, but nevertheless it's there. I'll take it. So that was the trade really that I wanted to talk about. And just a final word and thought is that if you're looking for that sort of trade, as often I will be, not necessarily specifically the day after trend type trade, but if you're looking for say a short at a resistance level, up above, however you've calculated that, whatever that key level may be, then often I would say just let it run. Often there's enough power to push through. Okay, and I'll always say, unless it's very, very quiet market, just see how it reacts to it. If it stalls at it, you can always get it on the downdraft. Always wait for the downdraft generally in these markets, because otherwise you can get caught and it'd be a valid trade and you're getting stopped because you've got a fixed stop above and it just pings up and takes it. Let it run, let that flurry happen, let them push it, let them do what they want with it, and then see. If you then see selling coming in, even if it's just above your resistance level, of course if it comes up, tags and holds and pushes on, that's a different story. But if you see just the buying just shut up on the tape, the wick coming, the sellers step in, it drives it back lower, or it drifts back lower, runs out, you've got the time then to take it. You've got a level to work off, you've got a swing high point to work your stop off. You're not just stabbing at the level, you're letting the tape, you're letting the price action determine when you're going to take that trade. So I always prefer to see how it responds as opposed to just standing in front of it. Often you will get it will come up, the tape will just stall, you'll just see that shift, and that's great. You can hit it right on the level. Often it's going to break through. You get a little, people have got stops there, pings through, but then it just runs out of puff, and then you can see it roll over, and that's even better, because at that point now you've got something to work off, a nice level to put your stop on, and you've got a bit of a head start. And okay, if it holds and pushes back up, so what, you stopped out. But otherwise you've got some meat in, you can cover into scale your cover into some of those breakout buyers who are just coming out here, and then you've got the rest of the meat of the trade to work under. So it's just an idea and just a thought that I prefer to use when I'm selling at resistance or buying at support in certain market conditions. So anyways, 13-minute video, we'll call it a day. I'll have a great week next week, got lots of data coming out, looking forward to it, and of course obviously headline risk with the Russia situation. So take care, keep the risk managed guys, back with another video soon.